Hey, I'm Johnny Lee with the Rise Real Estate Group. I'm a real estate agent right here in Los Angeles.
Hey everyone, I'm Brian McKim with House America Financial. I'm a mortgage advisor right here in Los Angeles.
How are you feeling with everything hopping out of February into a brand new month?
I'm feeling good, Johnny. The market's hot, it's
Yep.
competitive. I'm seeing so much more activity this March as compared to last March.
Yeah.
So it's exciting.
Yeah, for sure. I mean, we're just literally talking to a buyer 10 minutes ago and helping her walk through all of that. So things are exciting, which is great. As far as just the different clients you've been speaking to, how are they feeling about the market right now? And as we've kind of jumped into March, are you seeing more excitement, or is it more like I feel like I have to go right now? What are you kind of seeing?
I'm seeing probably a bit of both.
Yeah.
There's definitely excitement out there. I also feel like many buyers sense that this spring and summer market and beyond is going to be even more competitive than it is now. So
Yeah.
there's definitely a sense of urgency.
Yeah, for sure, for sure. Well, yeah, I mean that's especially as we head into spring, that's to be expected. And especially here in Los Angeles, it's a very low inventory, which I'm assuming most people who have been looking for a little while are aware of that. But in case this is your first time or you're peeking at what LA looks like, there is a lower inventory right now. But Brian, where are the rates right now? So thinking about for a typical buyer, maybe FHA or conventional. What where are we at this week?
So if you're a buyer looking at FHA or VA, rates are in the high fives, low sixes.
Right.
If you're looking for conventional financing or jumbo financing, you're probably more like in the mid sixes to upper sixes.
Okay. So for somebody who maybe they've never gotten pre-approved before, or they don't really know what even getting a loan is for a first-time home buyer, would you explain the difference between, let's just stick to, for this week, conventional versus FHA? What is the difference between that?
The main difference between conventional versus FHA is the guidelines for FHA tend to be more aggressive, a little bit looser. FHA is not as strict when it comes to credit score. It's not as strict when it comes to debt to income ratio. However, if you're talking about lower down payments, FHA mortgage insurance generally is going to be more expensive as compared to conventional. And especially for those looking at condos or townhomes, the challenge with FHA is that many projects and HOAs are not FHA approved. So when it comes to condos and townhomes, conventional financing is typically more suitable, but not in all cases. We can use FHA for condos and townhomes. It's just kind of a different process and it's a little bit more challenging. Um, in a nutshell, the rates with FHA, especially when you're talking about down payments less than 20%, rates on FHA tend to be better. However, the mortgage insurance with FHA is more expensive. So generally speaking, if a client has a credit score above 700 or above 720, the conventional financing option overall is going to be less expensive.
Got it. Got it. No, that's a good, clear way of saying it. So let's say someone doesn't know which would be the right fit for them. Is that something that they would ask you about? Would they reach out to say like, "Hey, I'm wanting to find out what might be the great. I've heard FHA is great, but how do I know what the best fit is?" Do they reach out to you?
Exactly. Yeah. So a good mortgage advisor, a good mortgage loan officer is going to understand and take the scenario that the buyer is looking at and then present different options. One of the options could be FHA. Another option could be conventional, could be at different down payments, maybe 3% down or 5% down, maybe 10% down. And my job is to explain the pros and cons of each option. Ultimately, it's the buyer that decides what's best for them, but we would look at both. And then, depending on the situation, there might be one option that just makes more sense, that's less expensive, that's better for the buyer.
Yeah, no, that makes sense. So yeah, it's definitely going to be a case by case basis thing. So if you live in the Los Angeles area, I love Brian McKim and House America Financial. I think they do amazing work for individual clients, not as a sales pitch of like, hey, you need to go there, but I've just worked with them a lot and I've experienced the quality of service and expertise that they have. So if you're in the LA area, I definitely recommend reaching out to them. If you are not, if you want to let us know in the comments where you're at, maybe you're not even in California, you're in a different state, but you're looking for a trusted lender or you're looking for a good agent, let us know and we're happy to recommend you some agents in that area. But before we wrap up this week's update, Brian, I was talking with a client the other day who's considering getting a HELOC on the home that they own in order to perhaps purchase another property. And they weren't really familiar with that process. I wondered if you would be willing to explain a little bit about what that could be if someone maybe wants to look at that as an option.
Yeah, it's a great thing to consider. It's a common question. So a HELOC stands for Home Equity Line of Credit. And in essence, a HELOC is a second mortgage on the house. So most likely they have a first mortgage. They probably got a rate a few years ago. Maybe the rate's like in the twos or threes, probably have a fantastic rate. And then they want to take cash out, but they don't want to touch that first mortgage. So they're going to get a second mortgage or a HELOC to pull equity out of the property. The advantages of a HELOC is that you only pay interest on the money that you use, the equity that you use. So let's say somebody gets a $250,000 HELOC, but they only use 50,000 or 100,000. They're only paying interest on the portion that they use. However, the rates on the HELOCs are typically tied to the prime banking rate, the prime rate. And the prime rate is essentially set by the Fed. And so right now, on March 5th, 2024, the prime rate is 8.5%. And then there's typically a margin on top of that. Let's call it in some cases 1%. So the rate on HELOCs right now, give or take, is going to be, call it prime plus 1. So you're looking at a rate of about 9.5%. Now, if the Fed lowers rates, which is expected in the next year, year and a half, we don't know exactly when. It might be in 3 months, it might be in 6 months. As the Fed lowers the rate, the prime rate is going to come down, and the interest rate on that HELOC is also going to come down. It's a variable rate. But right now, you're looking at rates probably in the 8s, maybe 9s. It is a good way to access equity from a home that is owned. But just take into consideration, if we're pulling money from the HELOC to buy another property, then all of that expense will be counted in qualifying. So the first mortgage on the property that you own, the second mortgage, the HELOC, as well as the mortgage on the new home, all of that needs to be considered, as well as rental income. So if one of them is going to be a rental property, either the departing residence or the new residence, the rental income can be considered, but again, a mortgage advisor should be able to rather quickly kind of show the customer the numbers, the options, and the qualifications of this type of scenario.
Yeah, absolutely. Then they can see if it's the right fit. That was a great explanation. Thank you. I know that's one of those phrases you hear a lot, especially as a buyer and a homeowner, but you don't necessarily always know what that is. If for our audience out there, if there are any other phrases you're curious about, but maybe you're like, I don't necessarily want to call somebody and reach out and ask, feel free to shoot us an email. Our contacts are in the description. Brian's number and his email are there if you want to reach out and get a specific answer to your situation, or if you just want to ask a more general question, feel free to leave a comment and we'll add it to our next week's update. Brian, thank you so much for being here and for the awesome clarification. And we'll see everybody again next week.